Hello, everybody. Thanks for being on today's session. So this is Adrian speaking. Hopefully you can hear me all fine and well. I'm trying something new today, actually. So this is the first of hopefully a new series of webinars we're going to do every week, where we're going to take a run through of all the latest opportunities they're setting up, whether it's cryptos, whether it's FX, whether it's stocks. We're going to see absolutely everything that's going on, all the opportunities setting up for today, and we're going to go through them, and we're going to talk about what we like, what we don't like, and go through everything from there. So if you can hear me, please do let me know. I know some of you have already done that already and just typed hi in the questions box. If you can do that again, that'd be great, just so I know it's all coming through loud and clear. And if you've got any questions as we go through today's session, please do fire them through into the questions box. Really happy to go through anything that you've got. Of course, hopefully we'll learn something out of today. So I'm hoping it'll be about 30 minutes. My guess is I tend to talk and talk and talk, so it'll probably end up being a little bit longer than that, but that's really what we'll be doing. So the agenda for today is basically the trades that are setting up. What I want to do is try and do something that's really high value, something that's interesting, rather than regurgitating stuff that doesn't really make any difference to anybody. So hopefully we can get straight into some really good content today. So before I do get into it, because I'm going to be talking about trades that's setting up right now, this is not investment advice. This is education. We're here to teach people how to trade. Yes, we have our own systems and strategies, but as I said, anything that you do, any trades you make, should be your decisions and yours alone. So make sure you understand the risks associated with all of that, please, everybody. So just a quick one. Let me read off the top. I won't read it all, but spread bets and CFDs are complex instruments that come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Past performance is not a reliable indicator of future results. Okay, so let's get on with that, shall we? Just quickly, let me know what you're mostly interested in. Is it FX? Is it stocks? Is it crypto? Let me know in the questions box. If you're interested in all of it, then type all, but let me know which one specifically, if there is one that you're more interested in. Adnan straight into all of it, which is cool, Judy. More specifically FX, but if everybody can let me know in that questions box. As I said, what I really want to do is really make this as inclusive, as participative, but in as high value as possible. So if I end up spending 20 minutes talking about something that nobody's interested in, it's a waste of everybody's time, isn't it? And I'm not adding any value. So let's get on, shall we? So bear with me. Let me just bring in my charts. I feel like I want to start with stocks today, really. What have we got here? Most people are saying all. It's kind of anything. Yeah, whatever's the most profitable, Jamie. You're a man after my own heart. It's whatever's moving, right? Whatever's interesting, whatever there's opportunity to make money from. I think I kind of feel a little bit like, FX is great and consistently, got a lot of view of opportunity from there, as has cryptocurrencies, obviously, and stocks have almost become the sort of the forgotten market by many traders. And I think that's a real shame, because I think there's a significant amount of opportunity that can be gathered from stocks. And I think especially if you're getting the timing right, particularly in terms of the sort of the stock market cycles that are there, I think there's a huge amount of opportunity from there. So what we're going to do, let's run the scans. Let's start off with stocks. I'm going to be talking specifically about US stocks. I'm not going to take forever on it. I'm just going to look at 2 or 3 opportunities, and then we're going to move on. Okay, so what I'm going to do is just bring up my scanner. This is from what we call the momentum stocks system. So this is looking at specifically US stocks, although we can apply this to UK stocks as well. And what we're basically looking at here is the daily chart trading opportunities on US equities. Now, I can look at a list of the S&P 500, which is the full list. I could look at scans for the Dow 30 stocks. I could do a slightly bigger list for the S&P 100 stocks. Today, just for ease of reference, I'm going to look at the Dow 30. I'm going to hit a search, and this is for the opportunities setting up over the last 2 days. Now, effectively, in the look back, this tells us which ones are setting up today. I mean, you know, the market's not open yet. These are effectively last night's trades, really. So it's American Express and Visa. We'll have a look at those as trades that are setting up. And I've already got Visa here on the right hand side. So this is a new trade from last night. US stock market opens, well, normally 2:30 UK time, but it's 1:30 at the moment because we're out of sync with daylight savings. But effectively, these are your latest opportunities from the momentum stocks system. Those of you that are Trendsignal members already, you'll be familiar with the red and green lines. You'll be familiar with the discs that are on the charts. And this is a system that is specifically using that technology that is designed specifically for trading US stocks. Okay, so the strategies are geared around the way in which US stocks specifically move. And what it's doing is it will create, whenever there's a turning point, let's just quickly get into some real basics before we start moving on. I feel like I need to do a bit of an intro. Whenever there is a turning point, which is the changing color of these indicators here and here, what our system will do is evaluate that change. So this is all about turning points. That's what Trendsignal is primarily focused in. Do we have a turning point in the market? And is that a turning point that I'm interested in following? So effectively, whenever there is a change in color of this line here, it tells us about a potential trading opportunity. This is where our system and our algorithm will then understand the context for that move. So what our algorithms will then do, and what the snipers do, the discs that are on the chart, it will analyze the context of that turning point to determine whether it's a valid or an attractive trading opportunity. In other words, is the pattern associated with that turning point, does it have a history of producing high quality trading opportunities? If it does, what it will do is it will put in one of those discs. If it doesn't, if it's not consistent enough or not attractive enough, there will not be one of those discs. Okay, that's basically how it works. So what we have here is a opportunity from last night, which is something that people can put on the close last night, or they can put them on from the open today, whatever. There's a buying opportunity for Visa here. Why? Because the pattern associated with that has historically produced very, very successful trading opportunities. In old terminology, this is what we call a sniper against the trend. So it's an oversold market. And typically, because markets are often following quite strong bull trends, particularly on stocks, and US stocks have been very strong over the last however many years, typically when you see a market that is so down on its arse, excuse my French, then typically it's a good time to buy. And what we're seeing here is a market that's very oversold, as in low down on this value here. It's heavily against the trend, so it's fighting against the weekly and the monthly trend, and yet this market is starting to show signs of life. Now, historically, that's produced us good trading opportunities. And from here, from the close from last night at $200.43, there is a buying opportunity on Visa. Now, how do we go to look to manage that trade? I keep it nice and simple, which is what I like to do anyway. When I look at my trades, particularly with US stocks, there's a couple of sweet spots that I tend to like to go for. I like to be in trades for sort of 1 to 5 days, typically. Around that sort of thing, whether that's FX, cryptos, or stocks, it doesn't really matter. That's kind of the way in which my mind works. And what I tend to like to do with equities is I tend to look for 3 to 5% gains. Why 3 to 5%? Because it's a good sweet spot, usually a pretty good reward to risk, and it tends to be a nice size of move that tends to repeat itself very, very well. And on stocks, if you're going for a 5% move over the last sort of 5 years or so, around 50% of those trades are hitting that 5% target, and they're typically 2 to 1 trades as well. So the typical win is double the typical loss, which makes it, you know, a pretty nice trading opportunity. Okay, in terms of the trade, we'll manage that trade in just a second, James, so just bear with me, and thanks for being online, by the way. So Pankaj, once you spot an opportunity on the chart, and where do you actually place the money with? So that's with a broker. So yeah, Trendsignal is just the charting tool from which you can place that trade with a broker. Now you could choose a CFD broker, a spread betting broker. Actually, if you're trading stocks, you could just trade with a vanilla stock broker if you wanted to. It's kind of up to you. You've got quite a bit of flexibility with shares. Me personally, I trade them as a spread bet. Okay, so but again, it's up to individuals and where you live in the world, really. Okay, so let's get into this opportunity. For me, I like to keep it nice and simple, and I'm not going to get terribly scientific, not at this point anyway. So nice 5% gain. So what would that be? Well, $200. Let's keep it nice and simple there. You put in the entry price, which is, you know, the model entry price, as it were, should be 200 spot 43 times that by 1.05. That gives you a 5% objective up to 210.45. Okay, so around there. That's the target for that opportunity, which I would expect if it does it, it'd take 1 to 5 to 6 days, something like that. Now, what's important to think of here is, well, there are higher probability targets that it could get to, and you can then spend time analyzing the charts to identify that. But I want to try and get through as much as I can today. We will do a little bit of that as we go through today, but I'm going to keep it nice and straightforward on stocks, if you don't mind. Okay, in terms of stop loss, what I like about this one is that there's a decent jump already. You know, we've separated quite a bit from the vector average line. And what we have effectively is 3 different types of stop losses we can use that are all statistically accurate. There's the entry point. We have this line intersection here. This is what we call the aggressive stop. We have the passive stop, which is the recent low. And ironically, on this candle, that's what we call the semi-aggressive, but it's actually tighter than the aggressive one, which is unusual. But my stop loss I'm going to select is here, which is on this vector average line price. Why am I going there? Because it gives a decent amount of movement, a decent reward to risk on this opportunity, particularly since the market's already jumped a reasonable amount. So in that case, my stop's at 195.05. It's about a $5 stop, $10 target. There's 2 to 1 reward to risk on this opportunity, and we'll see where we go with it. You know, recent moves on Visa have been pretty decent, actually. Some really nice buying trading opportunities. This one buying the day after, or the day its results were released, so the reaction carried on really nicely from there. A decent winning trade, and this one a really nice winning trade back from December as well. Visa as a market has actually got a really high success rate. It's one of the top performing stocks for the strategy on the Dow 30. So in terms of 5% targets, it's got about a 61% success rate over the last 5 years. There's also really nice support level off those numbers as well. So it's bouncing off that support that we last found at the tail end of November, and it's looking pretty decent actually. So quite happy with that one. We'll see where we go with it. Let's have a quick look before we do move on. Visa, one thing you must be aware of is its corporate reporting. Now, I know that it did its results here for the 28th of Jan, but you have to be aware of when its results are. So the thing to do is, and you can make a note of this, look at Yahoo Finance, look at the calendar, the earnings calendar there, and whatever symbol you want to do, just type that symbol in. We can look at Visa here. I've got it in here already, and I've got the Visa chart here. So the Visa was after the market close on the 27th of January. Why do I know it's after market close? Because if it's like 11 o'clock, it's after market close. If it's like 2 o'clock, it's before market open. So you'll see that it's generally quite obvious. But in any case, 27th of January, that's when you need to be worried about taking a trade. So if you've got an opportunity on the 26th or 27th, effectively you're walking right into its financial reporting date, which can be quite problematic. So for me, the next reporting date here is on the 25th of April. That's 6 weeks away. I don't need to worry about its next reporting date at this point. I'm going to be out of that trade well before anyone's even thinking about Q1 earnings. Okay, so I'm absolutely fine to look to take this as an opportunity. James, would you buy the spread bet on US stocks or just buy the underlying with Hargreaves? Depends if you want the leverage, James, ultimately. And it also depends on your dealing costs as well. So I'm not too sure on the costs associated with trading a Hargreaves Lansdowne, but if it's a minimum commission charge, if you're trading relatively small size, that can be quite expensive. Like a lot of US brokers, they're trading allowing commission-free trading, so it's pretty good value now. It just depends on what costs you've got and what makes it worthwhile. As I said, it might be also that you want the leverage associated with trading CFDs or spread bets, and that really comes down to your own personal pot and the risk that you want to take with it. But bear in mind, just because you can have leverage doesn't mean you should necessarily use it. My view on leverage is that if you've got 3 or 4 trades setting up, yes, you could put all of that money into one trade, or, which is quite risky, or you can spread your margin over a number of different opportunities, which, yes, you are leveraging up on the money you're using by by taking more opportunities and trading CFDs and spread bets and so on, but you're spreading the risk across multiple opportunities. So you're actually reducing the risk a little bit that way. Okay, I'm talking so fast, I don't know why I'm doing that. American Express, let's have a look at this one here. Really nice opportunity again, and again, it's a market that's bouncing off a little bit of support found from back in January and also back in December as well. So I like American Express as an opportunity. 172.77 was the close. What's it doing? So this is a different colored sniper. This is what you call a sniper with the trend. So again, it's an oversold market. So this line here at the bottom below 25, so it's nice and oversold. It means that you flushed out a lot of the sellers, and there's potentially just buyers left in the market in what is otherwise an ascending chart pattern, an ascending trend. So you've got uptrend on the weekly, uptrend on the monthly. The CP suggests that it's an uptrending chart pattern. In other words, this is a market where we're getting higher highs, higher lows. And what that basically means is there's a lot to say that this market is still in an uptrend. It has not broken an uptrend yet. In other words, it hasn't started to move into a downtrend. Therefore, I'm quite keen to retain this as a trade. So I quite like it. And again, in a similar way, my stop loss, taking this one, 164.87, looking at that semi-aggressive stop. And as far as the target, again, it's a decent movement behind American Express. I'll be looking for between a 3 to 5% target on this one. Ideally, probably looking at a little bit around that 180 level, where the market's found a little bit of support, potentially a little bit of, a couple of candlesticks there. Might look to fill that 180 level there. I say that's about a 3.5 to 4% objective. I think that looks pretty good up to around that 180 level. All right, so there's a couple there. American Express, has that got its earnings? Let's have a quick look. AXP, let's just put that into this. And there's loads of other calendars you can use, but this is kind of nice and simple. 25th of Jan, obviously we've had that. Next one, 21st of April. I expect to be well out of that trade before the 21st of April. Good. Okay, that's a bit of a whistle stop tour, but hopefully kind of useful. You can see what it's done. You can keep an eye on those trades if you want to. The purpose of this is to show you what's possible, really, and show you how quickly the process can be to identify trades and to trade them with confidence, really. Previous trading opportunities we can have a quick look at. There was an interesting buy trade on General Electric on Friday, pretty much plus minus nothing on that one as well. I mean, I won't go through that, but I just want to cover off on the open trades as they are. So that's GE, General Electric, nice enough opportunity. Their sniper against the trend, so we're just looking for a little sniff to higher prices. Walmart, the Dow trades that we are currently on and still open on Walmart. So despite this market sort of coming off a little bit, there's been a really nice buy trade there, long from 139.29, up about 2.5% on this, 3.5%, around that anyway, on this at the moment. Looking pretty good, up to $5 in profit on Walmart at this stage, looking for a little bit more. Bouncing up to resistance, so actually around that sort of 145 level, I'd be looking to actually take profit on that rather than something so arbitrary as a 5% level. So when you talk about our starter targets, that's a good starting point, and that's fine to trade off, but as you become more experienced, you'll start to tweak those a little bit just to refine those exits in order to maximize profitability there. Johnson & Johnson, I like this one as an opportunity. Again, a buy sniper against the trend, gone really nicely from 166 up to 171. So again, around a $5 move. It's actually hit about 4.87%, banging up into that resistance level. This could be about as much as it's good for, unless we can break through the resistance from January and break through the resistance from February as well. So we're right on those numbers. We found it again here. For me, this is probably done all it's going to do, and a good level to be looking to get out of Johnson & Johnson. I think we bought all the shampoo that we want to at this point. CVX, wow, Chevron. Just quickly, last one before I do move on here. With momentum stocks, unbelievable move. We've all been talking about oil. We've all been talking about oil stocks. The US oil stocks have done considerably better than some of the UK counterparts, Shell and BP. There was the buy back in Chevron, 134 back on the 24th of February. Massive beneficiaries of the increase in commodity prices, energy prices, and you can see how this market actually up to its high has put on a 29% move, currently up about what $30, $32 at this stage. That's technically still open, and you know, a lot of our members would have got in, a lot of them would have already taken profit, but until really this line here turns back green, effectively for some of our members, this trade may still be live. So a little bit like here, there was the entry, and it's only at that point there that we definitely should be out as a last case. So some of our members run trades to try and maximize profit potential until what we call an active stop kicks in. So it's down to personal preference, you know, but a 5% target, obviously well hit ages ago, but some decent moves. So quick straw poll. Anyone here trading stocks already? Anyone interested, or is it would it be something that would be totally brand new? Let me know in the questions box as well. But hopefully that's interesting. American Express, Visa, keep an eye out for those. I thought I'd spend 10 minutes on each type of market. That's 20 minutes so far on on stocks, but there you go. Right, what else have we got? Cryptos. We can be relatively brief on that one. There's not too much to look at on cryptos. What I'm going to do here is take a look at what we call the daily chart medium settings. So it's kind of like our standard settings, if you like. Let's quickly run the scan. Let's have a look at what's setting up on that basis. So is our more favorite, more tradable markets. There's about 24 of them. I'm going to be looking at the daily chart medium settings over the last couple of days. Hit search, and we're going to get into these. Okay, so the first thing, so when we look at a look back here on the scan, the number ones are the ones that are setting up today. So today's bar, the most live bar. Number two, that's yesterday's bar. So SNX was set up yesterday. XLM was set up yesterday. Do you understand? So what we can do is we can have a look at those opportunities and see if we like them. Let's go through it now. Start off with BCH, which is Bitcoin Cash. Let's have a look at this one. You can see the recent opportunities, really nice rotations actually, notwithstanding that little blip higher on the 9th of March. Let's quickly look at context for this opportunity. What are we seeing here? We're seeing the market that's in a relatively tight range, but definitely ascending. There is support down here. So I think the market's really good for is about 274, which is where we found support off it in the past. So there's a sell signal here, 285. I expect to go down to here at an absolute maximum. So if you're looking for a target, it's going to be relatively bite size. For me, whilst I can show you the TradeMate platform and so on, I like this as a stop loss. Just a recent little peak, little snippet higher off there. So that's going to be about a 1-to-1 trade, something like that. If we get that opportunity away this evening, we'll have to keep an eye on it. But just think about the wicks. Look, we spiked it there, spiked it there, spiked it there, spiked it there, spiked it there. The market is really struggling to break through that 274 or so level. So therefore, for me, that becomes a very, very good, an attractive target if you're looking to take a short. Why would you want to take a short? Because you're in a period of lower highs, lower high, lower high, lower high. This market is ratcheting lower down to a certain base level. Okay, so it's getting tight, it's getting restricted, but I think there's some decent action on Bitcoin Cash. So have a look at that one as well. I quite like it. Really simple, whistle stop. It doesn't take hours. Once you know what to look for, it certainly doesn't take a long time to look at this sort of stuff. Remember, when it comes to trading, what a lot of people do with their trading is if they don't have indicators, they don't have a system, they don't have signals like these snipers, you have to look at every individual chart in isolation to determine whether it's hitting support resistance or whatever. That takes an awful long time, and it's a lot of wasted energy. For us, I'm only going to look at markets that come up in the scan because those are the ones that already meet a high probability criteria. So it's only then that I'll do any further analysis on those markets. I will not waste my time on markets that don't come up in the scan because they don't have the criteria that I'm looking for. So this saves me a huge amount of job, and I can take those trades myself, and that's fine. I can use the starter target and so on, but actually what I'm interested in doing is having a quick look at a little bit of analysis to see if we can go from there. Okay. Okay. Okay, so It's something we're looking at, James, by the way. So let's Bitcoin Cash. Let's have a look at Dash. Have silly names, don't they? These cryptos. Choppy again, this one here, but again, I kind of like it. If you look down to again what's happened, that sort of 86 level, I think can see the market returning down to those lows potentially as well. So if you're interested in taking short trades and you've got the account to be able to do so, then again that sort of 86.50 down from here, 7th of March, here 24th of February, and here 24th of January, nice level of support. The market could well be sucked into that level. So this is a rotation down in line with the monthly and the weekly trends, which is making it quite attractive as a sell turning point as well. So again, keep an eye out for that as a potential opportunity for this evening. So a few short trades. You'll find that with cryptocurrencies, when you're taking those trades, they come in clusters. You get a batch of short trades and you get a batch of winning trades because the correlation associated with them. So just remember to keep that risk on the low side and controlled, please, everybody. TRX, which is Tron, choppy, really as you like. I mean, from my perspective, I don't particularly like this. It's chopping around over the last few days. It's stuck in an extremely narrow range, and it actually, for me, until it breaks above this sort of level, this 0625, I would avoid TRX, to be honest. I think the most likely scenario is that we keep banging between these levels because it doesn't seem to have enough oomph behind it. If it takes out 0625, then we're looking up to here and then up to here, you know, probably with quite a free run up to those levels. But for me, this is a market that is hugely indecisive at this point. I'm not interested in risking my capital on an indecisive market. There are much cleaner, much smoother markets that I could risk my capital on. So I will avoid it. Because if you think about it, what happens here is every time the market, if you look at these wicks here, this is what support and resistance in is, pure its form. Every time it goes up to that level, it's rejecting it, it's rejecting it, it's rejecting it, rejecting it, rejecting it, rejecting it. It doesn't like it up here. So what does that mean? Is there a big institutional seller up there? Don't know, possibly. But what it effectively means is that it's probably going to hold that level. So unless you're interested in this tiny little move from here to here, the probability play is it's going to stop there and probably start to come back around. In which case, I'm not really interested in it because there's not enough upside on that trade. So for me, that renders it a very low opportunity is probably the right way of saying it. XMR, again, a little bit choppy as these markets are. I think crypto is a little bit confused at this point because of what's happening globally as to where we are. From my perspective, again, I think this is unclear. I think there are better trades that we could look to take. And as much as I liked crypto trades, again, what I've got here is a very indecisive market. If you compare that back to even Bitcoin Cash, a more freer flowing market. You see the size of these moves, really nice, bigger, deeper rotations. That's what I like to trade off. If you see a market, even there, that is a lovely short. That's a lovely buy. Those are the markets that you want to be trading where they're freer flowing. If they're tight and they're constrained, then there's nothing to suggest it's going to become free flowing until it becomes free flowing. So why waste your money and take on unnecessary risk on a tight and constrained market? There's no point. Wait until the market breaks out. Wait until it puts in starts to put in a pattern of decent rotation, then start to look at that opportunity. It's a way of significantly reducing the risk on the trades that you're looking to take. And the whole purpose of this is to add value to the scans that anybody who's a Trendsignal member can run, but from there, which are the opportunities that have got a higher likelihood of success? To me, just looking at those four, I may be totally wrong in this particular scenario, and it may be the ones that I avoid go on and be fantastic winning trades. And do you know what? I hope that they do, because I know a lot of our members will be taking them anyway, regardless of what I'm saying today. But I think the point is that if we can stick to the higher probability trades and reduce the riskier trades and take fewer of those, and by just simply knowing what to look for, i.e., is this market, is it smoother or is it like that? I know what type of market I'm interested in trading. Okay, and I know which one I'm more likely to get smoother results in, and I know which one I'm more likely to be more profitable in and lower stress in as well. Okay, does that make sense, everybody? Give us a quick yes or no. Let's make sure we're all on the same page. That would be that'd be great. Okay, that's cryptos. Let's have a look at some foreign exchange now. I've been on for half an hour. Let's see if we can do this in the next sort of 10 minutes or so. I think that'll be pretty useful. What I'm going to do is move to feed number 1, and let's have a look at some foreign exchange. Now, there's quite a few opportunities, 2 principal strategies that I'm going to be looking at here today. The first one is to look at what we call the D1 sniper strategy, which is the starter strategy for our new members, and the strategy that we recommend getting on from there. So let's run a scan. So we're going to look at the D1 sniper strategy. I'm going to look at my list of markets for that strategy, which is mostly a few indices, FX, a few commodities in there. Let's hit search and let's have a look at what those opportunities are that are setting up right now. The Nikkei and the Dow have literally only just triggered in the last few minutes, I think, as the stock market has started to rise. So we'll have a look at those in just a second. Before I do, let's have a quick look at the trades from last night. So we'll start off with the UK 100. This is a market which has actually been performing really nicely, some really nice rotations. And again, much like when we looked at the momentum stocks, we looked at cryptos, it is the highest likelihood patterns that are identified by these discs that are on the charts. Now, this is for the UK 100. It's a daily chart, which is my favorite time frame, which is why I'm talking about it. I'd much rather talk to you about what I'm trading rather than what I'm not trading, because otherwise that's kind of a bit meaningless in many ways. So we've had a buy here for the FTSE. What do we like about the FTSE? A couple of things really. Number one, this is what we call a buy sniper with the trend. What makes it a buy sniper with the trend? Well, it's with the monthly trend, the MT there. You've got the green arrow there, which suggests that this market is rotating higher. It's in line with the longer term trend. So it's a little bit like speculating on a football team that has had a little bad run, but is otherwise a fantastic team. A bit like Manchester City, you could say. You know, they're having a few dodgy results over the last few weeks. It's allowed Liverpool to catch back up with them, but ultimately they're still a wonderful team, and speculating them on now, you might get slightly better value on the odds because they've had a couple of bad results, but they're not going to have bad results forever. So it's that kind of a thing, and it's oversold, right? The market is oversold. The pattern of this is such that this is normally about as far as it goes down before the market starts to lift, and it should have a decent upside from there. So there's a nice enough buy trade. It's offside a couple of pips at the moment, but that's okay. That's not really a problem. You know, we're down about 20 points on it, big deal. So we'll look to hold this trade for between 1 and 5 days, typically. As far as the target goes for that particular trade, you can run what's called TradeMate, and you can look at what we call our starter limits. So we have starter limits and extended limits. So there's a new member, we start you off on the starter limits. As you become more experienced, you could look to choose when to use the extended limits. So when the volatility is higher, when you're sitting there thinking, wow, you know, I love FTSE right here, I think it's got great potential because of X, Y, and Z, then you can look to the bigger, statistically accurate level there. New traders, we like to help traders get some decent trades under their belt straight away. So what we've got here, starter limit, calculate trade details, and what we've got there is the opportunity for there. So stop loss, aggressive stop loss here down to 70.25, target price up to 72.57. Why up there? It's a statistically relevant level for that market. It's actually slightly just inside these little bits of resistance here, so I quite like it anyway, and just inside this element of support back from the 25th of February too. So I think actually it's a really good level for a number of reasons here, where the market found a little bit there, you know, just inside here. That's where the 57 is. So a nice enough bite-sized target that I'm pretty happy with. We'll see how the trade goes for the next few days, but 72.57, I quite like it as a target. So TradeMate will produce a statistically relevant level based on the way in which this market is rotating at the time. Do you see? So it's, instead of having to calculate things yourself, you can use this. This can become more of a guide, and you might look at it as you become more expensive. Well, actually, I like it a little bit higher than that, or maybe just inside that, and that's okay. That's phase 2 in your development. Phase 1 is to get something that's statistically relevant straight away and to build from with your results there. Okay, so nice looking opportunity, FTSE. Pretty happy really with that. The other opportunity from last night was gold sell trade, sell sniper against the trend. I mean, look, it's a fantastic trade. It's already hit target. It's already been a nice winner. It's already done our objective in one day. So that was really nice, really easy to spot just by running the scans. Let's have a quick look at the opportunities setting up for tonight. These have actually triggered whilst I've been talking. So I haven't even had a chance to look at these yet. So let's have a quick look at them. And let's have a look at the Nikkei and see what's going on for there. And the reason that's only just set up, because it's only just price is only just limping above that green line, so it's just an opportunity. Will it still be an opportunity as we close out the day? We'll find out. At this point, it's fine. It's meeting the criteria as a buy trade, just like that one did there. A few weeks ago, it's a nice buying opportunity there. Would this likely be the same? Quite possibly. So from a pure turning point perspective, it's a buy sniper. It's against the trend. For me, I'd like to see a more compelling close. I think that what you've seen is some resistance here, here, here. It's struggling to get above that 25,500 level. If we could see on the Nikkei that we close above that level and show the highest close since, what here? So if you can get above those levels there, get a nice convincing close and show that there's some good life in this buy, then I'd be pretty keen to take it. At the moment, it feels like it's limping into a buying opportunity. So yes, there's a sniper, and yes, we can take it and it's fine. It's got a certain percentage chance of success, but I feel if we can pay higher for it, I think it's actually got a higher probability of success because we're going to be putting on a level after the rejection we've seen. So it's almost like if we can get up here and the day can finish up to this sort of 25,600 level, then it's almost telling me that this market has got oomph behind it. The oomph that failed on the previous few days, the sellers rather took the price back down again because there's still obviously quite a few sellers up at these levels. But if the price can go up, it might say, perhaps there aren't any sellers more now. So maybe the buyers are taking control and this market can then start to move more freely, probably up to around about this sort of 26,500 level. So a recent pivot there, a little bit of congestion at this area there. So I'll be looking at 2,600 as the ultimate goal over the next couple of weeks for the Nikkei. And the way the markets are moving, the market literally get there in a few days. It's quite volatile, quite high speed at the moment, but I would prefer to pay a little bit higher for it. Does that concept make sense, everybody? Otherwise, we're buying into what is a market that is finding resistance. So statistically, this trade's fine, but actually we could be walking into a slightly lower probability trade, right? So if we can just have a look at the context of this move and say, maybe let's see if it's got a bit of life behind. Let's see if it's got a bit of oomph. Perhaps we could look to take it and be keener to take it then. Let's see how the trade pans out for the rest of the day. Okay, it's not a buy trade yet. We'll be looking at the close. The Dow, some nice opportunities again over the last few weeks, some decent rejection off those lows, and we'll see again with this one. So nice candlestick, it's sort of hammering out the lows, it's closing back up again, just limping above that vector average line. The day is young. The US stock market hasn't even opened at this point, but I think it's kind of interesting. As far as objectives go, I'd be looking up to around that 33,600 for the objective. Stop loss below the low of that candlestick. For me, that gives it a nice reward to risk. And actually, in terms of where, again, we found congestion here, where we found resistance here and here, putting that objective just inside that high from the 11th of March sounds about right to me. And the thing with that is you can make that analysis in a very, very short period of time. It doesn't have to take hours and hours and hours to go through this. There are a few others that I wanted to quickly go through. One of the things that we quite like to do is look at opportunities that don't have snipers, and there are a few of those as well. So one or two, one of which I know somebody asked to look at Eurodollar was Raj. I could absolutely look at Eurodollar, and one of the things interesting is that's rotating higher. There's no sniper there, which means let's have a look at a bit of context. Why might we take a buy from there? Well, a couple of things. I don't like to get too bogged down on this because we only have so much time and so on. But what's really interesting down here, Raj, is that this market is bouncing off support. So the last time the market was down at these levels on the monthly, Okay, let me just zoom in a little bit here. See that number there, 108.82? That is a major monthly level of support. Okay, 108.82. The market has hit that. See how we've spiked it. Let me see if I can just get my pen in here. So that number there is the dotted line, the dotted green line just above the black line I'm putting in there. The market has spiked down to that number, Raj, and it's found support off it. So it's gone down to that level and it started to think, oh, you're finding buyers off there. That is a key reversal point from January, February, March 2020. We had a massive move from there, okay? And these are lines that repeat themselves. Now, this is significantly more technical than we'd normally go in our workshops for new customers, because for new members, because we don't necessarily need to know it at this point. But I do like to provide a bit of added value, a bit of added color on what's happening. So the context of this move, Raj, is that the market is finding support off a big structural level, a monthly level of support, and also off a weekly level of support as well. Again, the dotted green line there, again, showing us the level that we're bouncing off to. So I think this is a fascinating level. I quite like it as a buying opportunity. You know, yes, short term, if you're only looking for 100 pips or so up to the high from the 10th of March, sounds a good level for me. Stop loss below the low for the last couple of days, down that sort of 109 even level there. So pretty reasonable reward to risk on that one as well. Is that okay, Raj? We'll see. You know, when we're talking about trades here, a lot of people saying, well, you know, what's your view on Eurodollar? My view is not even relevant, and actually I don't even care, because my view, I don't even care what my view is, because my view will change so quickly based on what the charts are telling me. And I'm actually only really interested in what's going to happen over the next 3 to 5 days. That's all I care about. And people ask me all the time, you know, so Adrian, what do you think about such and such? Don't know. I look at the trades as they come through, you know, and I make a view on there. The problem with looking at things, say, well, there's a big level of support, and I think over the next couple of months, I think Eurodollar is going to go really high and blah, 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 blah. You end up with something called confirmation bias. And confirmation bias is basically where you're only looking for things on the chart or other reasons that support your view. Because if you've already made a decision that Eurodollar is going to go up for the next 2 months, all you will do is look for things that back up that decision to make you feel happy about the decisions that you've made. So, and that's not particularly useful. You've got to look at each thing objectively. And that's why I look at it and take it literally. People ask me, hey, what do you think about this? I know, let me have a quick look at the chart and see what I think over the next couple of days. That's all I'm really interested in. That's all I trade, and so on. So again, hopefully that makes sense. Bit of a digression there. So Eurodollar, I think it's interesting, you know, and so do definitely keep an eye on that one for sure. Let's have a quick look at some D1 accelerators, and then we're going to be pretty much at the close of the session. So D1 accelerator. There's a few opportunities I want to look at that we can go through. Let me just quickly run my scan and we'll see what we've got in here. So here's my list of markets. Let's have a run for the last couple of days, hit search. Let's have a look at these ones, the number ones, okay? So Aussie Yen, the first market I want to look at, Australian dollar against the yen. So what do we see here? The reason it's come up in the scan is because on the D1 accelerator, we're just looking for the vector average change. We're then looking at context. Some of the trades, our best trades, will have snipers, but that doesn't mean that's the only trade. Really nice buying opportunity there. And we're looking to be in these trades. Literally, the D1 accelerator strategy is part of the Trendsignal Plus program for between 1 and 3 days. They are very bite-sized trading opportunities, very quick in and out. You'll see that from the target. So if I just quickly put TradeMate on here for that buy, calculate trade details, you know, the target is up to 85.71. Okay, so without any manual calculation, up 85.71. So the market did it in the following day, and then it stopped and reversed. I don't care what it does after that because it's hit my target, right? But you know, it's done it and it's given us a really nice trade. All I'm interested in is that quick knee-jerk momentum move for 24 to 48 hours, basically. What we're getting here is the market rotating the other way. There's no sniper, which means it doesn't meet a preordained profitable criteria. So therefore, this is already going to be a lower probability turn. So the idea of this sell, this rotation from green to red, producing a high probability trade is already pretty low, right? We're unlikely to be a winning trade unless we can get in additional context. Unless there's something about this move, maybe there's a massive structural resistance level up at 85.50 that makes it attractive, but otherwise I'm not going to be interested in this move. All I can see is a market that is showing higher highs and higher lows. I'm seeing uptrends. I'm seeing everything telling me about higher prices. Yes, there's a bit of resistance up here, which does make it a bit more attractive. But for me, there are other trades that are around at the moment. And what I would significantly prefer to see is a much weaker entry candlestick than this. I would prefer, if we're going to be bouncing off resistance, I want to see that I'm selling into a falling market, not selling into a rising market. So if I look to take this trade tonight, which I won't, not if it looks like this, all I'm doing is shorting a market that's going up at this point with very little context to support that view. The snipers are trades where we look for reasons not to take it. The non-sniper turns are where we look for reasons to take it, if you see what I mean. So that's Aussie Yen, not interested. Euro CAD, that's on here as well as an opportunity for tonight. For me, it's got a sniper. I like it. Why do I like this? Let's go through the context for this opportunity, okay? So when I look at the longer term trends, my weekly and monthly trends are lower. That's what that is telling me. This means I'm in a market that is doing this, okay? So if I'm going to take buy trades, it's usually a very short-lived rise, okay? And that's fine. I don't necessarily mind that if I know I'm getting into the trade on that basis. I know it's going to be a short-lived rise, fine, that's okay. And that's effectively what this is saying. That's why we've got a sniper setting up for this one for tonight. The reason I like this opportunity is because downtrends have to end. They don't have to end, but they will 99.9% of the time, they will end at some point. The question is, how do we know when they've ended? Well, you start to know when they've ended when the pattern starts to go back the other way. You know, and you start to get, instead of lower highs, lower lows, you start to get a low, and you start to get a higher low, okay? So what you've got here is a high, low, high, low, high, low, and so on. So the question, what we can see here is a period of, that was a lower low, so this one is lower than that one. But here, that's a higher low. We're starting to buck the trend. The market is starting to rise. So in order for this market to go from that to that, you have to start to see the patterns change, right? And you have to start to see this happening, where the market starts to put in a lower as a higher low, right? That's a higher low compared to that low. This is what's happening here. So that was a low there. That low there is higher than that low, which then makes it suddenly a lot more attractive. I like this as an opportunity. This is a bit like a trend reversal. The pink ones are like a trend reversal sniper. So yes, we're against the trend, but it's the second opportunity. The first opportunity, that's against everything. So if you look at this one here, there's no sniper there on this buy. Why? It's just turned up from red to green. There's no sniper there because you're against the weekly and the monthly trends. You're against everything that's on this. There is nothing to support this as a buying opportunity. And that's a good job because it would have lost. And that's the good thing about the system. It prevented anybody from taking that opportunity. Yes, this one isn't here particularly clever. That's a loss-making trade, and that's okay. But this one, suddenly you're starting to see the market base and you're starting to see this opportunity rise. And that's actually a good looking opportunity. I really like those pink snipers. I think they show the market starting to ratchet its way back up from what has otherwise been a downtrending market. So we'll absolutely be looking at that tonight. Stop below that entry bar there on the around that sort of 140 double O's. And my objective will be just below these highs, around that sort of 142 level. That's where I'll be expecting the price to get to over the next sort of 1 to 3 days. Sterling New Zealand, 2 more markets to look at, everybody. If you've got anything else you want me to look at, that's fine. Sterling New Zealand is a market. It's a buy sniper. Believe it or not, it's still with the monthly trend because that speed in which it's fell has been so big. Really what we're looking at here is a market, you know, to move up a couple hundred points or 150 points over the next couple of days. 119.14, sorry, 194.14 is my objective for this one. That's why I'm looking for the price to get to on pound against New Zealand. It's a buy sniper. It's with the sniper on there. It's oversold. It's with the longer term, the monthly trend of this market. You see the green arrow there. I'm expecting a decent enough move for a few days before the market then takes stock. Who knows what it'll do from there. But for me, I think there's a good 100, 130 pips there of value in that opportunity, with an attractive enough reward to risk down to that sort of 190, 170 there. And then finally, we'll have a look at dollar CAD. The way this is pulling back is less clever, but again, you're seeing a market that is trying to rotate like this. Got a high, oops, high, low, low. So what are we seeing here? So that's the low, that's the low, that's the high, that's the high. This is higher, it's a higher high, that's a higher low. So you're starting to see the market ratcheting its way up. So it's sometimes easy to look at on a line chart. And when we're here at this point, we're looking at this market. Is it about to have its another wave to a new high? Well, if it does, then that's going to be a really nice winning trade. Okay, so again, I quite like this one. I'd prefer this candlestick to be a little more positive on dollar CAD, but I quite like it. It's a buy trade. It's in line with the intermediate trend, this blue line here. It's in line with the trend signal line at the bottom. It's got a sniper on it. It's in line with the weekly trend, the monthly trend, in line with a positive chart pattern. There's a lot to like about dollar CAD on this chart, and we'll be looking for a bite-sized objective around sort of 40, 50 pips on this one. That's pretty much it, everybody. I feel like I need a lie down after that, and that was certainly a lot longer than I expected to go through. But hopefully that was kind of useful. We went through some stocks, we went through some cryptos, we went through some foreign exchange. Let me know. Give me some feedback, please, in the chat if you don't mind. Was that useful? Was that interesting? I don't know. I think it is, but you don't know until you ask people, do you? So it's always good to know what people think. And often in these, in the questions box, people say absolutely nothing. You think, I don't even know if they're watching it anymore. So sometimes it's nice. Hopefully, if nothing else, it'll give you a little bit of an insight to, if you're a member, then great, hopefully give an insight into how we look at the charts and how we go beyond the rules to help try and identify more opportunities without it being horribly complicated. And if you're not yet a member, you can get a good idea about what the day-to-day routine is and actually how quickly it can be to identify some trades. So, yes, you've got all the hard work, the majority of the hard work, and in many cases, all the hard work is done by the scanners and done by trade mates. That's your phase one. When you're looking at these FX trades that are done for, you can go straight off that, straight off trade mate, and then you can then progress from there. You can start to then understand a little bit more, look at the chart, say, actually, I prefer my target here instead, or prefer my target just a little bit inside there, and so on. As you become more skilled, the initial rules can 100% become more like a guide from which you can build. Okay, and that's exactly how it should be. The way in which I tend to bring things back to golf analogies, which my middle son hates, but when you start off learning to play golf, doesn't mean you still play like that when you get older, and as you become better. So you start off in a particular way that allows you to get around the course, that allows you to get good results, allows you to be pretty happy, and maybe that gets you to a nice positive profit, maybe with a golf handicap of 13 or 15. But if you want to get those lower scores and better results with your trading, then just that little bit of view, that little bit of risk management, course management, slightly being more selective, can allow you to take your trading significantly further, so that you don't take certain higher risk trades, so that you do take more higher probability trades. What this does, again, back in golf terms, this allows you to smooth the scorecard out. It allows you to take double bogey, triple bogey off the card, giving you a much smoother round of golf, giving you a much smoother equity curve for your trading. Because the way in which you become a better trader is not by taking on lots and having lots and lots more winning trades. It's by being much more careful about the loss-making trades. If you look after the loss-making trades and you reduce those, you will naturally have a smoother equity curve, which is naturally much easier to manage psychologically, which will lead to, generally speaking, a much better outcome for you as a trader. Okay, I feel that often as retail traders, we focus so much on where's that next winner? Where's that next winner? Actually, where's that next loser? And what can I do about it? Can I spot it before it's even going to be one? And how can I manage that? That's what today is a little bit about. It's about showing you how you can find the opportunities, how you can see which ones are great, and how you can perhaps manage risk a little bit for a smoother outcome. Okay, good, excellent, everybody. Thanks very much for attending, and hopefully, here we go, a couple of questions coming through. Trevor, do you still trade the 2-minute charts? I personally don't have the time personally, but yes, I mean, dynamic trader is a strategy which is going phenomenally well, particularly actually with the volatility that's going on at the moment, Trevor. But this session is really for me to be going through more about things on a sort of a more of a part-time basis. But the dynamic trader program, very popular. I don't have the time to do it though. I prefer trading off of daily charts and so on anyway. It suits me. Running a business, Trevor, and 3 kids. As soon as I get home, the best time for me to day trade will be in the evening. But I got 3 kids to sort out and a wife. Don't tell her I said that. So it's a time thing. Yeah, dynamic trader trading off the 2-minute charts is a different system. Yes, so Trendsignal Plus is more for what you call swing trading, Trevor. So typically 4-hour charts, daily charts, absolutely. Okay, James, if you could let me try. Okay. Okay, so with the cryptos, that little widget with the daily, weeklies, and the 4-hour charts, 1-hour charts, that's only on the crypto system at this point, James, and it might be something we consider for the other types of products, whether it's stocks from the Momentum Stocks program or the Trendsignal Plus program. But that's a little bit of a work in progress at this stage. Okay. Good. All right, everybody. Well, look, have a wonderful week's trading. We'll be doing these every week until people tell me they're terrible. So if you want to come along next Tuesday lunchtime, please do so. We'll be going through it all again with whatever the scans are. Sometimes the sessions, maybe there's nothing going on. It will take me 10 minutes. Sometimes it might take me an hour. We'll see what happens. But otherwise, have a wonderful week. Until then, happy trading, guys. Bye-bye for now.